I bet big on vibes, got emotionally scarred. Told my broker I'm broke, he said play it hard. Wrote a will in a Discord full of bag holders, trading trauma like Pokemon, just older. I call it long-term hold, but it's rot in disguise. My net worth's a prank, my debt supersized. A spreadsheet of shame and a lactate addiction. Living off vibes and a high-risk conviction. You should've sold it. I know, dude, it's over. Let it go, let it go. I'm a walking red candle in a suit made of cold. Swing trading my sanity, no rope, just hope. Every dip I just dive, no plan, just vibes. If I charted my life, it's a bearish slide. I put the fun in fundamental flaw. Got a PhD in buying top and eating drawdown raw. Yeah, my 9 to 5, so watch list dream, but I clock in late to a panic scream. Got 3 monitors glowing like a 10 in bed. I stare at green ticks, but I'm always red. I treat YouTube gurus like oracles of fate, till I'm 3 puts deep and it's way too late. I got trading view tabs and no actual gains, just graphs of regret and invisible chains. I talk to my charts like a long lost dad. Why'd you break out and never come back? Maybe next week. Yeah, and pigs might fly.
You could've stopped at break even.
But I'm not that guy. I'm a walking red candle in a suit made of cold. Swing trading my sanity, no rope, just hope. Every dip I just dive, no plan, just vibes. If I charted my life, it's a bearish slide. I put the fun in fundamental flaw. Got a PhD in buying top and eating drawdown raw. Yeah, my 9 to 5, so watch list dream, but I clock in late to a panic scream. I pray to the pre-market gap up gods, then watch it dump like it's rigged by frauds. My whole portfolio's a performance piece. Call it D-Gen and D-minor starring me.
He's coping loud.
Yeah, I get that a lot.
Should we stage an intervention?
Only if it's a short squeeze ply. I'm a walking red candle in a suit made of cold. Swing trading my sanity, no rope, just hope. Every dip I just dive, no plan, just vibes. If I charted my life, it's a bearish slide. I put the fun in fundamental flaw. Got a PhD in buying top and eating drawdown raw. Yeah, my 9 to 5, so watch list dream, but I clock in late to a panic scream.
Buy high, cry later. Maybe this is just character development. This is not financial advice. It's a cry for help.
Oh, brother, oh, brother, oh, brother. Good morning, my little huevos rancheros. It is a beautiful Monday, June the 30th, the end of the month, the end of the quarter, and ideally the start of us actually making some money on this freaking show. Welcome back to another episode of the Matt Kohrs Show, the best live trading show in the entire galaxy. Well, maybe just in the US. All right, maybe on the east side of the Mississippi. Okay, maybe very specifically in the New York City region run by people named Matt. I think that's where we could safely say we're at least the number one show, at least on Mondays. On Mondays in the New York City, run by people named Matt, we are the number one show. I would say that's a pretty safe argument for all of us. Folks, I hope you had a great weekend. New haircut, looks good. Thank you. I was going to give a specialty winner star to the first person who realized that I had a haircut over the weekend. So congratulations to You actually don't even have a name, but you have successfully already achieved the first gold star of today's participation. I appreciate that. I was going to be like begging all day for it. Be like, please, someone just notice my haircut. And look at that. We're not even 5 minutes into the show. And we're on, dude, guaranteed new highs today. It's going to be a great freaking day. Folks, I hope you guys got outside. Well, first of all, I hope the weather was nice wherever you happen to reside, wherever you were. It was a beautiful sunny weekend, and I could just feel that vitamin D pumping into my system and really just alleviating all of my issues. So I hope you had a similar weekend. I hope you got your haircut. I hope you got outside, got to hang out at a pool, maybe had a little Hugo Spritz here or there. I hope you guys had a good one. I really, really do. So I'm excited for today because not only are we kicking off a whole new month, a whole new quarter, we're going to get some specialty action from the expiration of the JP Morgan position today. But as of right now, if the market were to open, if the world's largest casino were to officially go dingy, ding, 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 we would be at new all-time highs. Both the S&P 500 and the NASDAQ 100 are at new all-time highs. We have individual equities such as Meta and Avago and NVIDIA that are looking great, looking for a rebound in Palantir, praying that Tesla can finally get, I guess, the notice that the bulls are in control, because Tesla has not been feeling that way. So I think there's just going to be a lot of opportunity, and I don't think it's going to necessarily end today. I think we're going to have some good opportunity for the remainder of the week, but I do want to remind you, it is a shortened trading week. It's a half day on Thursday, and the market is completely closed on Friday. So once again, half day on Thursday, completely closed on Friday. And then hopefully that's going to give us even more time to relax and recharge and get all that vitamin D on the weekend to come back next week, and really for the next 2 weeks for the bulls just to keep pushing and pushing and pushing. I'm very, very optimistically bullish going into the July OPEX, just because right now we have price structure, price momentum, options flow, and seasonality. So when we have those four things all aligning, it tells me that's the smart way to be. Now, is it a guarantee? God, no. Obviously, there's a lot of unknowns. You never know what's going on in the Middle East. You never know what's going on with the trade war. Of course, there are unknown things that you have to consider as potential risk, but based on what we can currently measure, like I'm talking to the good empirical stuff out there, price structure, price momentum, options flow, and seasonality, all pointing in the bullish green direction. And I would argue that it's the higher probability pathway. Is it the guaranteed pathway? No, but I truly believe my mental framework of the market is always attempting to put somewhat of the puzzle pieces together to identify the high probability pathway and looking to see if we could take advantage of said pathway with a low risk, high reward opportunity. And that's exactly what I've been doing. Stop coping on Tesla. Everything else is amazing. Dude, I'm going to cope on whatever I want. I fully expect every single trade I ever get into for me to be able to turn $10 into $10 million. Has it happened yet? No, but I'm going to cope because it just proves that the market's rigged. As soon as I get into a position, you're telling me that all the trades are hidden in dark pools? Come on, man. It's just short ladder attacks. Short ladder attacks, short ladder attacks, short ladder. They're coming after me. I think Ken Griffin of Citadel Securities intentionally does not want me to be successful. I truly, in my own head, believe he is doing everything in his life to embarrass me in front of all my digital internet friends. And even though I have all these winning trades, we all know they're just short ladder attacking me. They're just short, like they know my positions and they're coming after me. It has nothing to do with the normal Gaussian distribution of the market and the 50-50 nature or the complexities of the time decay and options. No, my plays and my mentality is never the issue. It's the fact that the market is out to get me. They are out to get me, and they just keep short ladder attacking me over and over and over again. Don't get me started on it, folks. We were about to have a really good day, seeing if we could avoid all of the manipulative BS that goes down in the market. But you already got me spun up. You already got me spun up on the day. Very quickly, today's stream sponsor is Public. Is the disclosure going to stay up? No, it is not. There it is. Show them a little bit of love. Pinned to the top of chat in the description of the video. I know many of you guys watching this right now are already on Public, so this is a specialty message for the people who have yet to download Public. What are you doing? You're a crazy person. This is the best brokerage, in my humble opinion, that you could possibly be on as a retail trader, because I know of no other brokerage that cares about their clientele, i.e. you, the trader, as much as Public does. Pinned to the top of chat in the description of the video. I'll give you the full spiel when the market opens, but what you need to know is free to download, free to sign up, no commission fees, no per contract fees. In fact, you earn a rebate for every single options contract you trade. And make sure you are using the link pinned to the top of chat and in the description of the video, because that's how you're going to start off at a higher rebate tier. So make sure you are using that link rather than just downloading it. I just don't want you to start at a lower tier and then have to trade a lot to get up to it when you could already just start off at the highest tier. So we're going to be coming back to that. But really, I just want to show you what's going on in the market today. Stock futures rise as S&P 500 looks to add to a record high. Yes, you are not going deaf. You heard that properly. On Friday, not only do we hit a new all-time high, we also closed at the highest closing value on record. So the S&P 500, commonly thought to be the barometer of the overall market. I know some people talk about the Dow, but when I say some people, I mean geriatrics. I mean, they're probably, if you looked at the average age of a person who cares about the Dow, I would say it's like maybe 125, 150 years old. I would say that's the median, the average age of people who cite the Dow as being important. But anyone that is not over 100 years old cares about the actual important thing, the S&P 500, and then also the NASDAQ 100, which, surprise, surprise, also hit a new all-time high and also closed at the highest value on Friday. So it's kind of crazy. Look at the ride that we've had just in general. Not long ago, we were all stoked about a new high in February. Fast forward to early April, and we were all talking about Armageddon and life just blowing up and Trump ruining the entire world. And it was a thing that we were allegedly never going to bounce back from. And then fast forward from early April to now really early July, and we're talking about taking out these highs and actually persisting higher and higher and higher. How insane is that, of how quickly things change? And this is all literally from February till now. That is, I mean, I guess in my humble opinion, an insane turnaround. And maybe you don't think it's as impressive as I do, but hey, at least ideally we're making some money. So let me get rid of this. What is this? The Trump administration tells Harvard to violated federal civil rights law over its treatment of Jewish and Israeli students. Well, I happen to not be a lawyer, so probably not the thing for me to chime in on. I know you guys look at me and you think, hey, that seems like a guy who is an attorney. He also seems like he might have an MD and perhaps a PhD in marriage counseling. And I get that. I have that vibe. I understand that you guys come here and you see, man, that's just a kid who has it all together. Degrees galore. And I don't want to ruin anyone's party or anything, but no. I have a degree, and my parents continually remind me how upset they are that I don't use it, as I'm still going after my podcasting career. So I get it. Sometimes looks, they can be deceiving. So I hate to burst anyone's bubble, especially this early on a Monday, but I think it's important in social media to have a little bit of transparency and truth. Anyway, from tariff pain to record highs, a wild quarter on Wall Street. The S&P 500 has now added more than 8% since President Trump announced sweeping tariffs. You heard that right. Not long ago, if we rewind a couple months, well, actually more than that, we were all stoked about new highs. Then fast forward a little bit more, but still in the past, we were all like, wow, we're never bouncing back from this ever again. And now we're back here at new all-time highs. This from not really a trading perspective. I'm not talking about degenerate day trading. I'm not talking about more realistic swing trading. I'm talking about from a pure investing standpoint. The play out from this entire calendar year is a great example of why you should never let your political bias get in the way of you and your investments. I hear it time and time again, regardless of who is president, it is good to be a long-term investor in the U.S. markets. There has been no 15-year period where you could pick a random day, fast forward 15 years, and the market would be lower. So as long as you have a minimum of, and I'm just talking for investing, not active trading or anything like that, but when it comes to you and your retirement accounts, your 401ks, your IRAs, all the money that you're putting in the Caymans to avoid the U.S. government taxes, when it comes to long-term investing, as long as you have a 15-year at minimum runway, there's been no counterexample to that not working in the U.S. market. So whether you do or don't like Trump, whether you do or don't like Biden, or before that Trump, or before that Obama, or before that Bush, like regardless, the market in the long term grinds higher. Pick your classic blue chip stocks. Whenever they dip, load up on them, and then when they're ripping, just enjoy the gains. Like that, it's honestly that simple. We're always in this like kind of backwards world where people are willing to chase now and buy it and buy it and buy it, but then yet no one wanted to get Nvidia, Tesla, Microsoft, Meta, like any of the classics, Apple down here. They all like, oh, now I should be buying it, but where was it here? Everyone was just freaking out, and you almost have to train yourself to. And I'm not talking about like these random ass pharma penny stocks. I'm talking about quality blue chip stocks. Set an alert. When it dips 5, 10, 15, 20%, start buying. When it rips back up, kick back and say, hey, that's pretty freaking cool. Or you could actually not even have to do any of that and just dollar cost average on a random day every single month. Just throw a little bit more in. And over the long term, you're going to get a pretty good average fill. I think right here, this picture on the screen, this is something you have to drill into your memory of. In the long term, the bulls win. Being a perma bull is how you make money in the long term in the market. There's, I don't know the exact verbatim of this quote, but something along the lines of bears get to sound smart, bulls get to make money. And that's always really been my personal experience in the market is whenever we're going to crash, there's always someone with such a good sounding argument of why we have to crash. And they bring in all these fancy schmancy discussion of yields and trade implications and currencies and the fucking yen blowing up, like all this crazy stuff. And they sound smart. Bears get to sound smart, but you know who makes money? The bulls. The people who don't know shit about the market, they just throw money in their favorite stocks, and then they come back decades later, and guess who's up more? It is that bull camp. So yes, the bears get to sound smart, the bulls get to make money, and I guess that's up to you. Pick which side you want to be on. Do you want to be on the smart sounding side, or do you want to be on the making money side? I guess that's up to everyone. So if you watch the update video, and yes, this did come out right here 13 hours ago, the bears are being squeezed into bankruptcy. Well, that's definitely a little bit of clickbait, but hey, that is the current state of the market. So feel free to check that out. It's also up on Rumble right here. The bears are being squeezed, capitalized. That's how you know it's really serious, is when we start throwing in capitals there. But anyway, in this video, I gave you more of the stats, facts, and figures of why I believe the high that we are seeing as of Friday is actually going to be short-lived, and I think we're going to keep going higher. So enjoy us looking at 6,187.68 for today, because I believe literally after today, after this week, after next week, really after this month, we're not going to be remembering this number at all, because I do believe the market's going to go higher and higher and higher, and it's really in that update video that I did a better job at explaining it, but the TLDR is this. Over the past 10 years, the S&P 500 for the month of July has been bullish, as in ended higher than when it opened 9 out of 10 times. Looking at the NASDAQ for the past 10 years, it's ended higher 10 out of 10 times. This period up into the July OPEX, based on a Goldman Sachs research for the past about 100 years, like a little bit less than 100 years, is the most bullish 2-week period of the entire year. So basically, all of this is what I'm trying to scream at you, is that seasonality is absurdly bullish right now. Does that mean it has to be bullish? No, because we have these other events such as the Fed can announce whatever it wants to announce. Trade wars might break one way or the other. You never know what's going on in the Middle East. Of course, there's other things that you have to consider, and you have to think about these unknown variables that might break in our favor. And maybe the trade war stuff is amazing, and we strike a deal, and the market goes higher and higher and higher. Or it could also go the other way. In the Middle East, tensions can continue to boil down and the market could love it. There could be a ceasefire in Russia and Ukraine, or counterexample, it could all get worse. So this is my point, is you have to appreciate and really kind of be humble enough to accept what you do and what you don't know. Based on what we do know, the price structure, we have higher highs and higher lows. Price momentum, we're above all the major moving averages. And with respect to options, there's more bulls in the options market than there are bears at this moment. Based on what we can measure, like the empirical evidence does suggest the bulls are in control, but you have to be mindful of the fact that that situation can change on a moment's notice. Speaking of what can change on a moment's notice, Canada is removing its digital service tax on tech companies to restart trade talks with the U.S. This comes just days after President Trump canceled trade talks with Canada due to the tax. So this Canada thing is why the market started to dive at 1 p.m. on Friday. So we had a great day. The bulls were in control. And this is really why short-term trading is the most difficult, is because this was amazingly bullish. Everything we could measure was bullish. And then yet we dove basically until about 3 p.m. because of basically Canada pissing off Trump going on a tirade on Truth Social, and then the market, I don't know, basically said, hey, okay, like we don't think it's going to last long, and then we pumped it and closed, and guess what? Now in pre-market trading, we're scheduled to open up at a new record high. So that's why sometimes short-term trading can be so difficult, because you have news such as what is or isn't going on with Canada. But anyway, over the weekend, the fact that it did drop this digital tax that infuriated Trump, and now that we're restarting trade talks, what does that mean? It means we're opening up to a new all-time high.
Discussing on Canada, I think the removal of that digital services tax, while some may have argued that that was actually a point of leverage for Canada in any trade negotiations with the United States, removing that off the table does seem to have opened the door maybe a little bit more for
Canada
the U.S.
folded
and Canada
51st
to negotiate
state.
a deal. I think it's pretty, it's important to note that this kind of leaves the path for Trump and the Canadian Prime Minister Mark Carney to talk about something maybe before July 21st. Notably, that's a week or so after that July 9th deadline that Trump has been talking about getting all of this sorted. So,
he's been playing loosey-goosey with that deadline. I don't think it's that serious.
Earlier this year, Trump really kind of made a point of going after Canada. So, I think we'll have to see kind of how tensions evolve between those two border nations as they try to work toward an agreement.
So you get the idea. Basically, is that, it's fine. On top of that, we have some updates related to the UK as well. UK autos spared under US tariff cut, but still in question. So this is a smaller trading partner. Remember, the EU block is way bigger, but UK with the whole Brexit thing, smaller. And actually, we already had a favorable trade with them beforehand, which is why this was so easily solved, like a very early trade deal that was struck. The other thing to consider this particular week is the big, beautiful bill. Well, I guess one side, well, specifically Trump loves calling it the big, beautiful bill. The other side, recently, we've been hearing them calling it like the big trash bill, the big horrible bill. So once again, depending on what side of the aisle you're on, you're going to probably have a different name for this particular bill, which I'm assuming this week we're going to be hearing quite a bit of news related to it. Republicans fight it out on Trump's tax mega bill. Splits in Senate GOP on Medicaid and deficit strain effort to quickly pass the legislation. Trump's big, beautiful bill clears key Senate hurdle after high drama. Republicans got closer to advancing President Donald Trump's massive spending package following a procedural vote. The Senate is poised to now debate the mega bill for hours, as Democrats have already signaled that they will force the 940-page bill to be read out loud. I love the pettiness. They're going to make every single word of a 940-page bill to be read out loud. That's amazing. Love it. Questions still remain about whether the package will ultimately pass the House ahead of the self-imposed July 4th deadline. Will they hit the deadline? Won't they? I don't know. Trump did say that no one's going home for the holiday if it's not passed. Can he do that? I have no clue. We're going to find out. There's probably going to be, as this referred to, quite a bit of high drama related to it all this particular week. Trump tax bill hits Senate as GOP torn by competing demands.
Does Trump then have the votes? Do they have the votes in the Senate now to pass the bill? This has been working through the motions, and it continues to as we speak.
No, exactly. It's Trump is close, but he's also cutting it.
Chat, real human or AI? This one's close. I would say this one's close, and I'm going to leave it up to you. Generally, I'm pretty good. Maybe I haven't had enough coffee today. Generally, I'm pretty good at recognizing NPC versus real. This one's, dude, these AI systems are getting so good. They really, really are. I can't tell if this is a real human being or just a classic NPC. Dude, this one's on the fence. I'll leave it up to you guys to tell me what's right. Maybe people who've had more coffee than I have. Real AI, alien. Real but human clone. Ooh, we haven't seen one of those in a hot minute.
Very close. So the Senate balance is 53 seats for the Republicans.
I could see the alien
They
one.
have,
I see what you're saying more now. Alien. That's a good vote. I wasn't thinking that. Maybe I'm a little just like rusty from the weekend, not really like looking at so many NPCs, but that's a good vote. Good vote.
As you said, who voiced some sort of opposition. Two who are likely in the no category. Senator Rand Paul of Kentucky is a no, saying that he sees this bill as fiscally irresponsible for the way that it increases the debt in the U.S. We had Tom Tillis, who's voiced his concern about what this will mean for people with health insurance, Medicaid, and also for rural hospitals, which he sees a cut in funding.
Real lizard. Oh, you guys are going.
Really
You're going
hurt
more lizard
hospitals
people
in
now.
his state.
Interesting.
So we have some fiscal conservatives who don't think that the cuts are enough. We have some what are considered moderate Republicans, such as Lisa Murkowski of Alaska, Susan Collins of Maine, who are also concerned, have the same sorts of concerns as Tillis about Medicaid, and also what this will do for rural hospitals. We have some concerns about the removal of subsidies for clean energy, which could hurt some industries in their states. So there's a lot going on. It's close, and the math is there. If we're at 50-50, J.D. Vance, the vice president, cast the deciding vote. So it would have to be 4 defections for this bill to be sunk.
Okay, just four defections. In terms of the mechanics then, John, in what to watch as this works its way through the Senate and whether or not this will actually get to Trump's desk by July the 4th, what are we watching for as you weigh up those debates
this Friday?
that, of course,
Remember, market
are
close.
taking place on both sides of this Republican Party now?
Senate bill would add
the
3.3 trillion to
concerns are
U.S.
really
deficits.
about these
Jesus, that is
issues of whether
quite
it will help
quite the
if it will
ad.
satisfy the fiscal conservatives who really want more cuts to Medicaid, or if it's going to worry the moderates if these things go too far. And also we have public opinion, which is siding against the bill. Pew Research survey showed that about 50%
49% of Americans oppose the tax bill.
A Washington Post Ipsos poll showed
By
even
definition, that is
greater,
not a majority.
Concern about it. About 60% show that they disapprove of the bill. So what we're looking at now is a lot of horse trading. See if we can get some of these
Horse
yeses,
trading?
nos, and
Didn't know that was still an active market. So apparently 49% don't like it, but I can tell you one guy who really doesn't like it, the world's most wealthy man, at least reported, Elon Musk. Elon Musk rips into quote-unquote utterly insane Trump-backed mega bill. Elon Musk said that President Donald Trump's big, beautiful bill will destroy millions of jobs in America and cause immense strategic harm to our country in a post on X. Musk's prior criticisms of the spending package triggered a public feud between the two men, even though Tesla and SpaceX CEO has been the president's biggest financial backer. Musk's newest comments come as the Senate is poised to vote on the mega bill. Obviously, not the most happy of the deficit, and also uniquely not happy about cutting the EV tax credit. So kind of a double doozy there. But anyway, the bromance still seems to be a little bit in shambles. They liked each other, actually hardcore liked each other. Then they had a very public breakup. Then they had a public, oh, we're getting back together. Like, we kind of love each other again. And now, like, they're in this, like, awkward phase where I guess they're keeping up the friendship, at least the appearances, but clearly there are some cracks. All right, bringing it to today specifically, Monday, June 30th, the major macroeconomic thing you should be paying attention to is the Chicago PMI coming out at 9:45. So Chicago PMI coming out. That's the scheduled thing. I would say the other thing you really need to pay attention today is the JP Morgan position. They have a giant collar position that's actually, the strikes are nowhere close to where we are, about 4 to 5% away. So the gamma influence isn't much there. So probably what will have an impact on the market is going to be how they decide to roll it. They're going to start rolling it about midday today, and then the final prints will be actually just after market closes. So yes, we'll pay attention to the Chicago PMI, but I think what's going to have more of an influence on the intraday trading session is the JP Morgan roll of their giant collar position. They're going to roll it out to next quarter. They do it at the end of every single calendar quarter. Tomorrow, Fed Chair Powell will be speaking at market open. Definitely pay attention to that. We also get the JOLTS job openings. And then on Wednesday, we get the ADP non-farm employment change. And then on Thursday, actually, instead of like normally on Friday, that's when we get the unemployment. But this time around, it's going to be Thursday because it's a half day on Thursday, which is going to make everything much more complicated. And then Friday, the market's officially closed. So half day on Thursday with all the unemployment numbers. Friday, legit closed. And then Monday, Tuesday, Wednesday, we have some announcements every single day. And at least this time around, you don't have to be that worried about any earnings or anything like that. We're just not really in an earnings season. If you haven't already, don't forget to sign up for the newsletter. All the stuff we just talked about, I put it in a nice little cheat sheet for you. All the major market news, all of the major market events, and then the seasonality for each individual day. And you should just know to conclude the month, to kick off the week, and to really start the quarter, this particular day is seasonally a bit more neutral. Seasonally a bit more neutral. And on that particular note, dingity ding ding ding, the world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. All right, we are opening up. Yes, we gapped up above the all-time high. We gapped up above the high value on Friday. We have a little bit of profit taking out of the gate. Speaking of which, I should probably give you the key levels on the day. So these are the major levels I'll personally be paying attention to. As always, here, let me go back to the 10 minutes, a little bit easier to see. As I always do, I mark out the previous high, low, and close. These are important pivot levels, they're important psychological levels, and a lot of the times they happen to align with just major open interest levels. So once again, the green, the red, and the white, the previous high, low, and close. The white box is the 0 DTE transition zone from a delta and gamma perspective. Above it is thought to be bullish, below it is thought to be bearish. So obviously, we are opening above the close, above the high, above the transition zone, also happens to be a record high. And then the final thing on the screen are these yellow horizontal lines, which are the major open interest levels of the day. Obviously, we are very close to a huge open interest level of 6,200, which also happens to be a major psychological level. So out of the gate, I'd be kind of looking for support to be found at the previous high and resistance to be found at that huge level. From there, if we can break out and hold that level, I'd be looking for 6,225. If for some reason we get rejected at any point in here, downside gap fill to 6,187, that would be cleaning up the chart. I mean, that's actually a pretty smart play, especially because we're not that far away from it. We also have a key level at 6,180, and then we have the closing value at 6,173. So these are all the levels I'll be looking for out of the gate. Of course, I always have my bull case. I always have my bear case. That doesn't mean I'm always going to play it. Today, I'm exclusively looking to play the bull case. And if I just don't see a good opportunity to play the bull case, well, I'll just sit here patiently and wait for something to happen, or just wait for tomorrow if need be. So here we are, just kind of opening it up. I'm trying to not do anything too crazy out of the gate. Let me actually switch this up so you guys can see what I'm doing over here. I have not traded today. I have a bunch of fresh accounts. I got my ass handed to me on Friday. You guys all saw that on the stream. And then I just took the rest of the day to get 20 more accounts approved. And I did that. So I have my 20 Apex accounts and I have my 2 take profit accounts. So basically trading 22 accounts right now. But I should clarify the take profits, they are not funded. These are still in the eval stage. So really, I'm only trading 20 funded accounts, and then I'm trading 2 test accounts. I just want to be very clear and upfront of where I'm at and what I am doing. But I haven't done any trades today. I'm just trying to wait for that opportunity. Obviously, we are dipping, and I wouldn't mind actually taking the first reversal of the day. I would not mind at all taking the first reversal of the day. Folks, if you see me and I'm up somehow more than $300, you better yell at me. If I blow these accounts out, it is 100% your fault. The goal is basically for 10 trading days in a row, 300, 300, 300, 300, 300. So I should, at the end of 10 days, have $3,000. 10 trading days, 300 a pop. If I am going more than that, you better yell at me. You better be like, what the fuck? Matt, do ICT trading work? I think you mean Matt, does ICT trading work? Remember, even though this is the internet, grammar still matters. We do live in a society. No, it doesn't work. And you know how I know it doesn't work is because he has never had a profitable trading year in his entire life. A lot of people point to the fact that you could point out that he's had some success, as in like an individual trade that's worked. But remember, on any given day, the market 50% of the time it goes up, 50% of the time it goes down. You could take a person who's never traded in their entire life, like literally their entire life, and all you would have to do is like make them randomly pick bullish or bearish at market open, and half the time they're going to be right. So just because someone has individual bouts of success and or failure, that doesn't mean overall they are successful and or a failure. You have to look at the larger time frame. Show me your basically your broker statement for a month, for a quarter, for half a year, for an entire year. And the guy who created ICT himself, he's just a lying fucking scumbag, I would say. I'd put that on the record. And the reason I know he's a lying scumbag is because there are countless videos with exact evidence and exact proof showing he is a lying scumbag. Like, he's doctored his reports, he's lied about trading, he's lied about his past, he's stolen money from people. Like, dude, it's just brutal. It's just absolutely brutal. I went 80% on Tesla when it dropped to 284 at the beginning of June. Well, I hope you make money off of it. Do you think MSTR will get added to the S&P 500? No clue. I don't run that. I don't get to decide what's in and what's not in. But what I do get to decide is if I'm going to take this particular trade. Oh, how do I want to do this? We didn't quite get... I'm thinking there might be a bounce off this high value on the SPY. Did we actually hit it on We did hit it. So the gap fill was filled on SPX, but not quite on SPY, and now it was successfully filled. All right, so I'm wondering if there's going to be a bounce right off of this level. Is there a yes, no? Like, I'm wondering if people had their sitting buy orders right here, if people are collecting their short profits. Like, obviously we had some profit taking, we had more aggressive bearishness out of the gate, and it's still persisting. Patience. They made them read the bill out loud, and no one who pushed for the reading stayed to listen to it. They all left. That should be criminal. You think that should be a criminal charge that someone is just doing like politicking? I mean, I think it's stupid, but criminal? That's a bit excessive if you ask me. Criminal. Freaking criminal. All right. Your boy's in a trade. Just got to fill. What do we? 28, 38, 42, 43. Okay. That's what I'm going for. Like I said, calm, cool, collected. I am nothing but a market sniper. In and out for one perfect trade. That's the name in the game. That's what I'm attempting to do. If this does not work out, it's 100% your fault. If you guys let me become undisciplined and overtrade and take on too much risk and trade multiple contracts, this is all your fault. Either you guys are paying this credit card bill for blowing it out, or you're going to be sharing all the profits. Actually, no, I'm going to socialize that. If I blow out, you guys will be equally splitting my credit card bill for all these tests. But if I win, that's like the socialization is I'm going to socialize the losses to all of you. But if I win, I'm going to keep that in my own bank account. Is that cool with everyone? Socialize the losses, capitalize the gains. I hope you guys are cool with that. But I just want to get in and out for one perfect trade a day. Come on, hit it. There we go. 300 a pop. I did it on all 22 accounts. That's it. I am a man of my word. You guys are supposed to yell at me. You guys saw it. I just made $300, 22 accounts. So that's 6.6K. So 6K on the funded accounts and then 2K or another 600 on the eval. Bada bing, bada boom, in and out. And like I said, if you guys see me over trading, you should yell at me. But like I said, I'm going to be a man of my word. I'm shutting it down. Let's just, should I double check that there's no rogue order? Maybe I should quickly double check. Cancel all orders. Okay, all orders are canceled. We did this. We did that. Let me just disconnect the data feed to make sure that I don't have any rogue orders. This happened to me at one time last week, and then like it popped off and it did something it wasn't supposed to do. So I just want a sanity check because I don't want to do a stupid little misstep that cost me. So we're good on take profit. And Apex is loading. Apex is low. I think it's okay. There we're good. Okay. No rogue orders. You guys saw it. Just made over about 6K. Took me, I don't know, a minute and a half. And we are just shutting it down. Easy peasy lemon squeezies. Day one. Your boy is on a 10-day trading challenge. And we're going to see if we could do it. And the name of the game for this challenge is 10 days, $300 a pop every single day, looking for 3K per account. I have 20 accounts. That would be 60K in total. So we started off 6K strong. Very stoked about that. The other name of the game here is to trade less than 3 times a day because some of these might be losers. So I don't want to trade any more than 3 times. I only want to trade 1 contract, so never allowed to trade multiple contracts. I don't know. There's like a whole other set of rules, but basically... never exceed 300. As soon as you see 300, done for the day. Realize should probably even be trading more than twice a day. Unless I do 100, 100, 100. That's also technically acceptable. But never more than 1 contract. The real thing is as soon as I see 300, just take the money and move on with my life. That's like the real purpose of this. So you guys just saw it. Day 1 of the challenge is complete. And we're going to see how long we can keep doing it for. So we're going to see. Is it a rule to make sure you trade before 10 a.m.? No. Timing on this one doesn't really matter that much. It more so matters of taking it when the system actually fires. So when I got in, it was because the system like legit fired. So it might fire before 10, after 10, right at 10. I don't know. It's not going to fire really before 9:30. 295 equals 300. Well, Kohrs towing. I know that commission fees might be tough for you to understand, but there are in fact commission fees. And also there's potentially slippage as well. So slippage of $5 here or there. Like some days it's going to favor me, other days it's not. But yeah, slippage is a thing. But why 300? Because in 10 days, that is going to be 3,000 per account. And the buffer for all of those is 2.5. So it's in 2 trading weeks to get above the buffer. Why do you use multiple accounts? Because you make more money that way? I mean, I feel like, David, that's pretty self-explanatory. If you make $300 in 1 account, do you know what's cooler? Making it in 2 accounts. You know what's cooler than that? Making it in 3 accounts. You know what's cooler than that? Making it in 4 accounts. Like, more money? I don't know. It's pretty... I'm you know, sometimes they say there's like not bad questions. I feel like that was like actually a bad question. To make more money. Why stop at 20? That's the amount you're allowed to have. That if I could have more, I would have more, but Apex stops you at 20, which is why I'm also on Take Profit Trader. That's exactly why. To get more than that, because if you make $300 on 1 account, that's awesome. 2's even more. You can go up. I mean, you could really scale it up in the world of sim defunded. You can get many accounts. Like, so I know you could have up to 20 on Apex. You could have another 5 on Take Profit. What's the other one? Some people are trading on Top Step. Like it just whatever. It depends on the ones that you trust. I wouldn't just arbitrarily go out there and buy the max amount of accounts for all the ones that you hear about because I don't trust all of them. I generally, in the world of futures, stick to Apex, Take Profit Trader, and I'm now starting to learn a little bit more about Tradeify, and I believe on Tradeify you could also have up to 5. So really between that's how you could have 30 accounts. And think about the math on that. If you just go for $100, you're not just getting $100, you're getting $3,000. 3 freaking grand. It adds up real quick. I mean, $100 a day trading NQ is not difficult. 3K on 1 account is, but when you do it on $100 on 30 accounts, And then imagine that. Just imagine your bank account, 3K every single day, just getting added and added and added. That's obviously quite a bit of money. Quite a bit of money. Unfortunately, that bounce not really holding. The Qs, we are reevaluating the high level from Friday, which was at one point in time, the all-time high. But right now, the all-time high is the opening minute high on both SPY and on QQQ. Meta, we have some profit taking. Actually, we just kind of have profit taking across the board for whatever reason, which is a bit of a bummer, I must admit. You would hope that at some point, maybe the PMI report, we're about to get the PMI report in 20 seconds. The Chicago PMI data is about to drop. In fact, are they going to bring up our boy, Rick? Let me reload this. Where's our boy Rick at? Rick? Are we going to get Rick today? Should be drop.
Relatively more. JPM, Goldman Sachs, Citi, Bank of America as banks with the most excess capital likely to be deployed.
No real impact
so
yet.
You are seeing a nice move in these stocks.
Well, Wells Fargo's trading
came in a little less than expected, 40.4 when they expected 42.7. Well, there we go. A little bit of a delayed reaction. Shout out to Profit for posting that. Where's our boy Rick?
A lot of the businesses
give us Rick.
Banks, and I say that by
there we go. There's that pop.
Doug Goins, Vice Chairman, when you bring in a lot of these people from JP Morgan, it doesn't matter. Goldman obviously is
U.S. Treasury Secretary Bissett. He's saying something right now.
For my charitable trust is Capital One, Richard Fairbank, and what he's doing with a closed loop system with Discover
the
Financial.
time to have done that.
I want to know.
Would,
I don't know.
Bissett, this is the Treasury. This is live.
So a lot of people in the market point out to the success that has been in the bond market. You have seen the 10-year come down almost a half a percentage point since the January highs. Where would you like to see the 10-year, and where do you think it could end by the end of the year?
Well, I think it's going to depend on a lot of things, but I think that we could see a further lowering of rates. I think inflation is very, very tame. I'm not going to comment on Fed policy, but I've said that I am focusing on the 10-year. So as we see inflation come down, I think the whole curve could parallel shift down. And I'll point out when everyone says, oh, the market, the bond market's worried about this or that in the U.S. U.S. is the only major bond market that has lower 10-year rates than any other country. Every other country, the rates are up.
While we're talking about
profit
interest rates and
taking
the Federal
all morning.
Reserve, it has been recently reported that you might be in consideration for the job as the next Fed
SPY
chair.
a little bit more choppy,
when you've been
trending
asked
down
about the
though.
likelihood recently, you said that it's up to the president. Is it a job that you would want?
I will do what the president wants, but I think I have the best job in D.C. We're making a lot of progress with the president's leadership. Think about it. We are going to have the tax bill on his desk by July 4th. We're going to be wrapping up the trade talks. So I think we've had great momentum, and we will be working on Chair Powell's successor over the coming weeks and months.
You had mentioned that an announcement could be as early as October or November, and Powell's term ends in May of 2026. How is the street supposed to navigate between that announcement time and the time between the term being over for Chair Powell? You were the one, I want to remind people, that had brought up the idea of a shadow Fed chair prior to the election. Is a new appointee
still
supposed
getting
to be
hit.
considered that shadow Fed chair?
Lots of calls selling. People are locking in their profits.
We'll see. There's a seat opening up, a 14-year seat opening up in January. So we've given thought to the idea that perhaps that person would go on to become the chair when Jay Powell leaves in May, or we could appoint the new chair in May. Unfortunately, that's just a 2-year seat.
So ultimately, do you think that there could be some confusion?
Well, I don't see why there would be confusion because, obviously there are people who are currently at the Fed who are under consideration. So why would there be confusion if that you add another candidate in January?
So what about Fed policy as it stands today? the president has voiced his preference for lower interest rates. There have been investors, but also most recently the Bank of International Settlements warning about any inflation risks tied to the tariff policy. Realistically, how much can the Fed lower rates this year? And what is the level and rate of unemployment that would suggest a faster pace of rate cuts? Economically, what has to slow?
Well, look, I said during my confirmation,
This
I
is
won't
such,
talk about the
like,
mistakes the Fed's going to
politically
make. I'll only talk about the ones
refined
they have
answers.
made. They made a gigantic mistake in 2022. And as I like to point out, medical studies have shown that people who fall tend to look at their feet, which makes them fall more. And my worry here is that having fallen down on the American people in 2022, Fed's now looking at their feet. We have seen no inflation from tariffs. If we do, which we don't have to.
5 minute, 10 minute bearish, 30 minute breaking down. 5 minute, 10 minute bearish, 30 minute testing.
So, team transitory, having failed the American people.
Lower highs, lower lows on the 1 minute.
A little frozen at at the wheel here.
Part of this uncertainty does relate back to the trade deals. You've set a deadline for
Looking
July
for a potential
9th
trend
with
reversal
key trading partners,
somewhere
or
at the
least
high or this
administration
key
in total
OI
has.
level.
How many of the key 18, the 18 most important partners that you have been speaking about have deals that will be agreed to by that time?
We'll see. I'm not going to negotiate on TV and let people off the hook. But as always, there's going to be a flurry going into the final week as the pressure increases.
What can you tell us about what's coming
Rumble
out of those
joins the
deals?
Russell
Are they
2000 and
deals,
3000
or are
indexes.
they negotiations for future deals?
Well, what I can tell you is that the staff level, whether it's at Treasury, at USTR, at Commerce, people who've been around for 20 years are
it's about
in
time.
amazement, and they're saying these countries are coming with offers that
Good
they
for
can't
Rumble.
believe. So, in terms of bringing down tariffs, non-tariff trade barriers, we're leaving aside currency, the financing of the labor and capital in an advantageous way. All these countries are pulling back.
So you've said that trade negotiations could be wrapped up by Labor Day. How
Trying
should
to invite
investors
Trump
and
to
nations
military
impact
parade?
be thinking about that July 9th deadline? And could that be pushed back to avoid going back to those April 2nd tariff rates?
Well, that's going to be up to President Trump. And I'm not going to tell any country. We have countries that are negotiating in good faith, but they should be aware that if we can't get across the line because they are being recalcitrant, then we could spring back to the April 2nd levels. I hope that won't have to happen.
So one other part of the tariff strategy that a lot of investors have been
All right,
asking
we're
about
starting to
is
wake up now.
related to the housing affordability
Mag 7's
crisis.
still
There's
diving,
still
though.
Section 232
Actually, so
tariffs
is the
being
SPY.
seen as
Price
it
is getting a
pertains
little
to,
bit of life, but
lumber
the
and
options
timber.
market
Those are
getting
key
beat up.
materials for housing construction. Are you in support of them ultimately, given where we are in the housing affordability crisis today?
Well, I think it's important to break down. So what we're
That's
negotiating
not
now
a
are the
good
reciprocal
trend if you are
tariffs.
bullish.
There's
That's just
232s
straight
take
up
longer
call
to
selling
implement.
and put buying.
So we'll see what happens with those.
Also on the housing market, what kind of timeline? Well, first of all, is Fannie and Freddie going to be privatized? And what type of timeline would you look to do that on, while also ensuring that mortgage rates won't skyrocket on the heels of such a plan?
Well, let's work backwards on your question. Is anything we do, we will be focused on the mortgage rate, the spread of mortgages over treasuries, and ensuring that that does not move. But I can tell you that we have been busy with peace deals, trade deals, and tax deals. And once peace deals going well, tax deal done on July 4th, a trade deal wrapping up midsummer, and then we will focus on Fannie and Freddie.
One more question for you. Another thing that is making its way through Congress is legislation as it pertains to cryptocurrency, but right now stablecoin. Will this bill help in terms of making stablecoins a bigger force in the payments market, in the Treasury market? Will they be a larger force of what absorbs new Treasury supply?
Well, what you're referring to is the Genius Act. The Senate's passed it. It's now with the House. President Trump, myself, much of the Senate leadership, and many in the House are encouraging them to pass the Senate bill as is. I think we could have that also done by mid-July. And I think stablecoins create an exciting new payment rail. And importantly, it will be a source of demand for the U.S. Treasury market. Because if you think about it,
Mag 7 potentially bottoming out after quite a bit of globally, selling.
Would you rather have a private
SPY
stablecoin that's backed by U.S.
was trying to get going, got hit pretty hard.
Best practices regulation.
Having an issue at the all-time high, sold down right to it,
PBOC,
popped above it, below it, above it, below it, above it, kind of just stuck right after it.
Ex post, the government can turn off. I think everyone is going to choose the U.S. private sector with U.S. regulation all day, every day.
Secretary Bessent, we appreciate you joining us here in our New York studio. That is the U.S. Treasury Secretary, Scott Bessent.
Scott Bessent.
All right, our thanks to Sonali Basak and, of course, to U.S. Treasury Secretary Scott Bessent. You take a look at what the...
All right. Well, not enough to get the market that stoked. We basically... I actually don't hate this. I get that we are seeing the options market get hit. This, like, clearly we are trending down. But from a price perspective, the fact that we opened up and then came down to the high value, we're cleaning up the chart, because if we didn't, everyone would be like, but there's still a downside gap fill. There's still a downside gap fill. There's still a downside gap fill. So the fact that, what was the high value here? We even cleaned it up on NDX as well. So both the S&P 500 and the NASDAQ 100, am I the most stoked that we're getting hit? No, but also remember, it's only 9:55. We haven't even hit the turn of the hour. This could still easily be an amazing bullish day. Now, obviously, I grant you the fact that from 9:32 to 9:52, we had 20 minutes of put buying and call selling, and then same thing on the SPY. Like, things got beat up, but once again, a little bit of a silver lining argument is at 9:33 on the SPY, we cleaned up the chart. We got the downside gap fill, which I think from a psychology standpoint is going to make things a little bit easier for the push higher, because then you're not going to have people so worried about, like I said, all over on Twitter and X and all the journalists saying downside gap fill, downside gap fill, downside gap fill. So the fact that we already got that taken care of, I wouldn't mind a base to be created right here, and then I want to go up and see a test of 6,200. Most likely, there'll be a clear and evident rejection on attempt one. Is that a guarantee? No, nothing I ever say is a guarantee. Nothing in the market is ever a guarantee. But just looking at the amount of open interest that is currently sitting at that level, would not be surprised, just as people go from out of the money to in the money, if they react, take their money off the table. And not only do we have this level at 6,200, but let me show you something else that's going on today. Let me zoom in. Huge gamma level at 6205. So I think somewhere in this region, we're going to have a bit of a problem if the market gets there today, somewhere in this 5-point region between 6,200, 6,205. If I were a day trader or a scalper on that pump, on the very first pump, I'd be locking in my profits there. As a swing trader, I'd actually just wait for the pullback, a higher low, and then base it off of that. But somewhere in this 5-point region, you have a lot of open interest and just a key psychological level of 6,200. And then you have a huge gamma influence, particularly a negative gamma influence at 6,205. So the TLDR there is this 5-point region is not something that on attempt one I would just assume, oh, we're going to break through it and like not have any issues. Actually, if you are playing that, like if you go long in this particular region, I think you're going to definitely have to handle some heat in the kitchen type of a situation, because I'd fully expect if we pump up here to at least on the first attempt, maybe on the second, maybe even also on the third, but some form of rejection, not even necessarily from bears. Of course, they might do it just because they're going to be bearish at key levels. So the risk reward, I totally understand it. But more so of profit taking. So obviously we'll be able to monitor it in real time. Of course we will. But I just want to call that out there. Oh, Meta's catching a bit of a bid. So is Palantir. I need Palantir to get back to like 145-ish. It got hit on Friday. Most likely it was rebalancing, but like it was dramatic what happened to Palantir on Friday. Tesla still in the red, cannot catch its footing. NVIDIA putting in a rare red day. RUM is green from the induction into the Russell 2 and 3000. That just means all those family funds who are mimicking those are going to be forced to buy Russell. Netflix has buzzed my breakout level at 1,330. Meta, I would love for that to just keep going. I'm fucking destroying it on Meta. I'm up 18 grand, another 7 grand today. I'm up 109%. This is probably why you guys should get into the trading Discord, because I am murdering on Meta. What else do we have? Murdering it also on Netflix right here, up 15.5K. That's 70% on Netflix. What else are we in? I'm in a lot of positions right now. Palantir, I'm down 6K. And then I'm up 5K on Q calls. I'm up 6.5K on SPY calls. I'm down 6K on Palantir and I'm down 6K on Tesla. So that's a bit of a bummer. Down 6K on both of those. But like I said, between the SPY and the Qs, that's 11. And then between Meta and Netflix, that's an additional 32. So 43 minus 12. So I'm up 31,000 net right now. Not going to complain about that whatsoever. And hopefully it just keeps going, because like I said, I'm long on Meta calls and Palantir calls. So I need Palantir to keep going. The Friday's action really messed me over. And Tesla, that was maybe I just cut that. I tried to front run Tesla, and that was just not a smart move. And now that we're seeing more political issues arise, like I just really thought Tesla was going to be more highly correlated with the NASDAQ, and it's just not. I was thinking about the robo-taxi news. I was like, okay, great. Wait for the pullback. We got the pullback. I thought it pulled back enough, and I really thought we were going to get going. Once again, my overall bullish prediction on the NASDAQ for the summertime, but we're just not seeing that correlation currently exist, which is a bit of a bummer. I'll give it a little bit more room to breathe, but it's not looking like Meta. It's not looking like Palantir. It's not looking like Netflix. It's just doing its own thing. And unfortunately, its own thing is in the opposite of the direction that I need it as of now. Obviously, Tesla, a notorious equity that can move at any moment. So I'm being mindful of that.
Order filled.
Oh, we're long, folks. We're long on the other account. We are long. We are long. We are strong. We are long. Where is it? I'm working on some strategy stuff on a personal account where I don't have to worry about some of the consistency rules. So I'm actually working on a whole new swing system, and that's what this is all about on the screen right now. Speaking of which, why did that not work? Okay. Okay, perfect. Just need to get those orders set up. The SPY and the Qs are both just currently being pinned to the high value and also happen to be the also all-time high as of Friday. So that's where the SPY is. That's where the Qs are. We're seeing Meta catch a bit of a bid. We're seeing Netflix catch a bit of a bid. Palantir catching a bit of a bid. Broadcom flat. Coinbase flat. Microsoft giving a little bit up. Tesla flat. NVIDIA maybe starting to bounce a little bit right now. Here's a look at the Mag 7 potential inversion point at 952, 953. Overall, the trend is still down, but maybe this is the bottom and we're starting to pop. Same thing on the S&P 500, though a little bit more jagged. If you're just joining in right now, I do want to very much remind you that the JP Morgan position will be expiring today. So they're going to be forced to roll it today. So JP Morgan, We're not really that close to it, so there's not much of a gamma or really a true delta influence on it at this moment in time, because the closest strike of that collar position, when I say collar position, I'm saying that because I need you to know that their play is actually 3 different legs. So that's a good thing for you to know. Well, technically 4 if you just count the underlying ownership of S&P 500. But anyway, from an options perspective, it's a 3-leg position. It's a collar. So that's all expiring today. In terms of influence, historically, when we're really close to those strike prices that are involved in the collar, and I mean, because it could get up to like a 40,000 contract position, there's a big measurable impact. This time around, it's a bit different because we're not that close. So when we're not that close, just when you're not close, literally just measurably the gamma influence is less, because gamma rises when you're closer to at the money. So the fact that we're so far away, 4 or 5%, there's not much of a gamma influence on the position, but that doesn't mean that because of the structure of it, we won't see it. And I guess to really explain what I mean there is the fact that they're going to roll it today around midday. And I'm just saying midday because this is when they've started the roll historically, but JP Morgan will most likely start rolling the position midday today, and they probably won't finish until right after market close, like 4:15, something like that. So that's when we're going to get an idea of the new strikes. And we're also going to see throughout the day, probably midday until right after market close. That's probably when we're going to see like the measurable impact on the underlying. And in this case, the underlying is the overall market. But they're going to just be making a brand new massive collar position. So we're going to see how that plays out. So I just want to call that out to you, because if you see some funkiness starting in lunch or right after lunch, you might want to go check out something like Spot Gamma and look at how things are going haywire or not going haywire. It's not going to be a 0DT, so it's not going to be the green line. It's not going to be the light blue line. It's going to be the orange and the dark blue. Those are the ones that are going to have like a clear change at some point today. I don't know that point. It's not like JP Morgan calls me up and says, hey, Matt, here's when we're going to start rolling 40,000 different contracts. So if you see something funky in price, it might be exactly that. It might be worth your while to check out what in the world is going on with JP Morgan and the options market. Hey, Matt, you mentioned this before, but just checking, does JPM do this every quarter? And this has been happening for a while. Yes and yes. They do it every calendar quarter, not every fiscal quarter. So it ends on the last day, like today's June 30th. Technically, the fiscal quarter ended with OPEX, like whatever, last week or whatever the hell that was. But they do it for every calendar quarter, and they've been doing it for many, many, many quarters. For those who trade on a smaller scale, SoFi seems to have a sympathetic relationship to fintech in general. Cheap options and volatility made a quick 200% $15 options this morning. That's not a good way to do it. The idea of cheap, you shouldn't be basing cheap on the nominal value of the option. Cheap would only be in a trade. Traders never call something cheap or expensive based on the underlying value, at least not good traders. If the nominal value is an issue for you, that's when you start getting into spreads. So I assume, like you're saying, SoFi is quote unquote cheap, but that's not actually the definition of cheap in the world of options trading. Cheap in the world of options trading is really kind of based on the IV of the underlying thing of, are you getting a good premium value or an expensive premium value relative to it itself, not just the nominal value. Just because something is trading at $1 in the options market, let's say you pick a random call for a random expiration date, $1 in itself is not cheap or expensive. That's not like how you would measure it at all. You might be overpaying, you might be underpaying. And one way you could battle that for something that is nominally expensive, let's take something like a Meta call or a Netflix call or an Nvidia call. The way you can make that more nominally cheap, where you could trade it with an account that doesn't have as much money in it, is you're going to start looking at something called like debit spreads or credit spreads. So you'd want to spread the position. You definitely like want to take advantage of spreads. This idea of like just trading something because it is nominally affordable is not necessarily a good idea, because there's still a theoretical chance that you're overpaying, and you don't want to overpay regardless of if it's $1 or $1,000 or $10,000. Sometimes something that's like pricing in at $8,000 actually might be a great quote unquote cheap deal relative to where it's normally being sold at. And other times that could be comically expensive. You don't know by just like the nominal value. So one workaround, like I said, if you are in the US dealing with pattern day trading, this, that, the other thing, and having an account that doesn't have much money in it, but you want to trade something that has a higher value, you're going to want to look into what's referred to as debit spreads. And so, for example, let's use this SoFi example. Like, let's say you want to be bullish, you would buy a call, and then on the same expiration date, you would sell a call higher up. Let's use something like Meta. You could, maybe you don't have enough money in your account to buy the 750 call. What you would do is you would buy the 750 call that you normally would want, but you're like, shit, like my account doesn't have enough money in it. What you could do is sell the 755 call. Ooh, let me move that down a little bit right here. So you would buy this call and sell this call. You would do that simultaneously, and that's referred to as a debit spread. You buy the closer one, you sell the one that is farther away. So obviously there's a lot more math that you should be knowledgeable of if you were to trade debit spreads, but just to kind of give you the quick and dirty explanation of what it is. You remember when the market crashed right after 4th of July because it dropped out of the race? It was an insane day. I actually don't remember that at all. Hey, Matt, bought an Apex account this morning with code Goonie and went short 10 contracts at 750, forgot about it and came back up 7K. Have I passed it? Is it that easy? 10, if it's locked in, yeah, that's it. You pass the test, which remember, it's like a lot of people have issues passing Apex. It is actually comically easy to pass Apex evals, but the way that makes it easy to pass it, you cannot train in that manner with performance accounts. And if they catch you trading that way, they're just never going to pay you out. So it's really, really easy to go from eval to performance. That's why you basically always see me with performance accounts, because when I blow out, I just pass it that day or the next day. It's not hard to pass it. But what the manner, the system, the trade methodology that you use to pass it, you cannot use, unfortunately, with performance accounts. And if they catch you doing it, which they will easily catch you because it's pretty freaking evident, you're just never going to get a payout. Drives me crazy when people say they are looking for cheap options, just means less than $100 contracts, LMAO. Well, it's probably just because it hasn't been properly taught to them. I wouldn't blame them. I would blame the people that they were learning from not explaining it properly. Sometimes you just don't know what you don't know. It's not their fault. Like, for all we know, someone saying that, it might be their first or second day trading ever, and they're just attempting to learn. So, like, I see what you're saying, like, as a pet peeve. I would have a bigger issue with it if someone who's like, I'm an expert trader and they're selling an options course and they have whatever, like YouTube channel, and they're attempting, if they're getting it wrong, well, okay, that's kind of silly at that point. But if you just have a person who's like, no, dude, I'm like new to the game of trading and I'm attempting to learn, like, whatever. We were all there at one point. We were all there. Do you think QQQ can get to 580 this month? Sure, why not? It theoretically could. Like, it's not like there's a rule against it. It just becomes a question of how statistically likely is it. And your question was 580. I could actually give you the exact odds of that right now. You could just look at the delta, and those are the odds of it hitting that level. Damn, why is my Weeble always weird when I shut my computer down? Yeah, like the delta is roughly the percentage chance of it closing in the money. And then you could actually double that up for the touch. That's like the really crude math of it. So let's look at QQQ, and then let's look at the monthlies. The monthlies, July 18th. So the chance of us closing above 580 is 7.5% chance. So I'm literally looking at the delta, which is 0.074, so 7.5% chance of us closing above 580, and then you would double that up for the chances of getting it touched. So if your question is between now and July 18th, what are the statistical, like what are the true odds of us at least touching 580? The answer would be double that, so 15%. And like I said, that's like some crude back of the napkin math. When you look at the delta, obviously make sure you're on the right side, whether the call or the put. The delta is telling you the chance of that closing in the money. So if you look at something that's at the money right now, the delta is 50-50, because if you're at the money, well, okay, 50% chance above, 50% chance below, because the market's normally distributed. But the thing that I'm really trying to teach you here is the chance of just that value being touched, you would double the delta value. So right now, especially if you're out of the money, 580 is clearly out of the money because we're trading at 551. So 580, the chance of that being touched by July 18th is double the delta. The delta is currently reading at 7.5% chance, which is the chance of it closing in the money. So you would double that, 7.5 times 2, to 15% chance of it being touched, of that nominal value being touched. Like I said, is that the exact math doubled? No, but it's going to be close enough just to give you kind of like a crude way to compute it. Think PLTR will test Friday's low before it moves higher? I have no fucking clue. I feel like a lot of the times people are just asking the wrong question. Like, I really do. I think retail traders in aggregate, which is why 95% fail, are not ever really properly taught what questions you should be asking. So who the fuck knows if Palantir is going to be touching that low? I don't know. Like, you'd have to do some advanced modeling on Palantir sell-offs on Friday and the chance of being touched on Monday or Tuesday or blah, blah, blah. Like, you could try to get some sort of historic rhyme or reason. But what's more interesting is just asking yourself, for whatever time frame you care about, what is the trend, and can you get in on a low risk, high reward setup? That's it. Like, time and time again, that's what active trading is you need to react to not predict. So like right there, that's a very predictive based question of, do you think this is going to hit? I have no fucking clue. I don't have a working crystal ball that tells me that, and no one does, especially not retail traders. You're attempting to predict an outcome, which is not how you win at trading, at least not in my humble opinion. In my humble opinion, the way you win at trading is just reacting to the current real-time information you can measure. So for example, if you took this breakout trade at 950, you would have never known that Meta is going to keep going up. But what you did know is, okay, it dip. You know, the daily trend is higher, so you're waiting for the shorter trend to go back along with the longer trend. And if you're right or wrong, well, you had well-defined risk at the 948 low. You are reacting to a setup, not predicting that, oh, this is the moment it's going to go. I deeply believe that retail traders are not taught how to be a successful trader. And whether you do or don't agree, the end result is that 95% of retail traders end up losing money. So clearly somewhere in the process, it's going wrong. How do 95% of people in the retail trading space lose money, even though your odds are 50-50? That doesn't make sense, folks. The math ain't mathin'. The math ain't mathin'. If I had $5 for every time Matt said, I don't have a fucking crystal ball, I'd have at least $100. You'd probably never have to trade, honestly. Matt, how do you choose which calls you are buying? There's a couple different models I run. A lot of the times, though, it's identifying key gamma and or delta areas, which a lot of the time does happen to overlap with larger open interest. The name of the game for me is to use all the information I have, whether it's options flow, options positioning, price structure, like something like that, or even knowledge of like the JP Morgan position. I'm trying to do what the big guys are doing. So how do I pick a strike and a date? Well, most of the time in terms of dates, big players are playing the monthly and the quarterly. So a lot of the times I'll look at the monthly and the quarterly, like whatever, triple, quadruple witching. So like for right now, I'm in a lot of the July 18th. Why am I doing that? Because that's where the big players are. Folks, you have to realize in the game of retail, we have no real influence. We are less than a drop in the bucket. Retail traders do not really matter in the grand scheme of trading, just financially. If you added up all the total dollars in retail trading versus all of the dollars in Wall Street, we're infinitesimally small. We just like retail trading. It is very rare. You would have to get a circumstance like GameStop where all of retail does something all at once in a company that Wall Street just is generically not paying attention to. And then all of a sudden, that's where you can see influence. But in most circumstances, in 99.99999% of influences, retail trading just doesn't matter. So because of that, my thesis is generally I want to be not on the side of retail because retail gets it so wrong. So if I know that retail is generically doing something, I don't want to be with them because I know 95% of the time they lose money. So I want to be contrarian to retail traders, and I want to be in alignment with big traders, large institutions, hedge funds. So coming back directly to your question of how do I pick my strikes? Well, first of all, I want to make sure that that's what the big players are playing. So I'll use something like spot gamma to say, okay, like where are they at? Are they long calls? Are they short calls? Like vice versa. Like what are they doing? Where's their expiration date? Like I want to trade with the larger trend, which I would identify as a combination of the 4-hour, the daily, and the weekly. Those are the three larger time frames that I'll pay attention to. Once again, the 4-hour, the daily, the weekly. I want to see alignment in those, in the 4-hour, the daily, the weekly. They're all bullish or all bearish. So that's like my first check. From there, I then want to see that's just our definition of trend, which actually we could dive further into that and define it by higher highs and higher lows or lower highs and lower lows. That is, in my book, the definition of trend. If you have higher highs and higher lows, you are trending upward. If you have lower highs and lower lows, you are trending downward. So I want to identify trend in that medium to longer time frame for active trading. It's not like long-term investing, but for like active trading. I want to look at the 4-hour, the daily, the weekly. If those are all trending up, great, I'm bullish. If those are trending down, great, I'm bearish. Just because I'm bullish or bearish doesn't necessarily mean I'm taking a position, because from there, the other filters I'm going to use is what are the big guys doing? Just because something's trending up or trending down, that doesn't necessarily mean like I have some interesting levels to play off of. So for example, Friday, we had like a pretty extensive breakdown on like the meta and I'll just use this one as an example. I find it's easier to teach by using real examples rather than just talking in hypothetical. So I'll come to Equity Hub. I'll look at meta right here. So I'll do a pretty extensive breakdown at this. So I could see the low volatility point, the peak of positive gamma is at 710. If we were in that zone, it would most likely act as quite a bit of support, and it would actually kind of, in a certain matter, like act like a black hole. Like price would have a lot of mean reverting characteristics. So if we go slightly above it, it would pull it back into it. If we go slightly below it, it would pull it back up into it. So kind of it's supportive, mean reverting. It's a black hole. That's 710. Then I could see right here that, holy shit, these dealers, the market makers, they are short a lot of calls, which means the outside world bought a lot of calls for 750. So this is the first thing that jumps up to me. And I guess if you wanted to, you could get even more detailed. And I already knew this was calls, but this is just because we spoke about it on Friday. But right where my cursor is, this giant orange bar down to the bottom, this means that the dealers, the market makers, are short a lot of calls, which means market participants, whether it's a bunch of retail or institutions, a hedge fund, insurance fund, whoever the fuck it is, I don't know who it is, someone is long a bunch of calls. As in, this is a legitimate, like hardcore bullish bet that also is going to be exhibiting negative gamma influences. And remember, negative gamma is slippery price action, while positive gamma is more of like mean reverting sticky price action. Negative and positive gamma should never be construed as bullish or bearish. It just tells you the characteristics of price when you're roughly in that zone. So anyway, that's two key things you need to know here. First of all, there's a lot of people in aggregate, maybe it's one player, maybe it's a lot of players, I have no clue, that are long calls at 750, which means the market makers sold them at 750. If we get there, awesome. I noticed that 740 might be a tough thing to get over because that's the opposite. There's a lot of sold calls there. So 740 might be a bit of a hurdle to get over, but looking at the gamma distribution, we could easily just keep pushing to 750, 760, somewhere in here. I would love to take profits at this level because at that point, and this is just based on the current information. Remember, this information that's on the screen, it could change in a minute. It could change tomorrow, or it doesn't necessarily have to change at all. These are just the live bets. For all I know, something is amazing is announced about Meta, and people decide to YOLO into the 775s and the 800s, and we see a bunch of long calls down here. That's possible. Or maybe it comes out that Mark Zuckerberg is literally like a lizard humanoid, and then all of a sudden people buy puts. Or maybe retail traders and institutions and hedge funds and insurance funds, maybe they love that he's a lizard king, and it actually goes all the way up to 900. You just don't know. So like that's what I'm always saying is, and I think the best metaphor for the game of trading really is poker, is you don't know what the turn's going to be. You don't know what the flop, the turn, the river, you don't know these unknowns. You know unknown information's coming in, but there's really no way you can like discern what it's going to be. So your best opportunity is, or in my mind at least, this is all my own humble opinion, is you can only be basing it off of the measurable information that you have in front of you right now. So coming back to the poker metaphor, you only know your cards. You know your cards, and then there you know the flop, and you know other people's bets, but you don't know their cards, and you don't know the incoming cards. So for right now, I can tell you the option structure. I can point out where you have positive gamma, where you have negative gamma, where people are playing it. We could even get an idea right here, monthly, you could even get an idea of when it expires. So right here, this is actually going to be expiring somewhat soon because the gamma is completely changed. So there's certain things you could do to gather more information. But in terms of like, do I think it's going to go up? I don't know. It depends on other people and do they choose to buy or sell. If they're aggressively buying, we'll go up. If they're aggressively selling, we're going to go down. As to why those people make those decisions, well, of course, I mean, we could have some conjecture, like all of a sudden, we can assume if there's an amazing AI announcement from Meta that might prompt people to buy. But at the end of the day, you don't know why people are buying. You don't know why people are selling. Like, are they active traders? Is it a bot system? Is it a working bot system? Is it a broken bot system? Is it a working bot system that sucks? Is it some intern at a hedge fund that accidentally made a fat finger mistake? Is it a really shrewd, adept, amazing trader at a high, like a hedge fund that's actually doing something really, really smart? Is it insider selling? Is it like my point is that the list just goes on and on and on. So as to why at any given moment someone is buying or selling, the amount of variables that go into that equation, which is basically all traders in the entire universe of traders who might be trading Meta, that's so many variables that it's a borderline infinite. So like to assume like, okay, why was this bar green? Why was this bar red? Why was this bar green? Fuck if I know. And like, we're not going to figure it out. It doesn't matter. That's why I think the whole KISS methodology, keep it simple, stupid, is this idea of just like, if you were to take a trade right now, whether bullish or bearish, do you like the risk to reward setup? That's it. Do you like the risk to reward setup? If you went short right now, are you okay risking 746? Are you okay risking $1.50? If you're right, are you trying to ride it all the way back down? Are you paying attention to the SPY? Made a fresh low, but maybe it's recovering. The Qs didn't make a fresh low. There's a bit of divergence. Time and time again, it's not this game of predicting, at least in my opinion. You shouldn't be predicting the next bar of, oh, the next bar is green or red. Like, you might have hope. You might be like, I really want it to be green. I really want it to be red. You might want it to be a bigger one, a small one. I don't know if you're buying premium, selling premium. Of course, we're all like hopeful that the next bar is very favorably in our, like, just favoring our positions. But in terms of like trying to trade off of that, of like, oh, I'm predicting the next bar, folks, I'm telling you right now, you have a 50-50 shot. You have a 50-50 shot on any time frame less than the daily chart. I'm talking about the 4 hour, the 2 hour, the 1 hour, the 30 minute, the 50 minute, the 10 minute, the 5 minute, the 1 minute. If at any large data set, if you look at the past 6 months, the 1 year, the 5 years, the 10 years, the 20 years, it's 50-50. It's normally distributed. We have about as many green bars as we do red bars on any given time frame. And the reason I'm saying below the daily, I did do this research on the daily bars. There's a slight edge for the bulls. 54% of daily bars are green, as in they close above the previous close. And that means 46% of them are red. But even in that, that's like only a small edge. Like it's just 54 versus 46. Fun fact about that data is this is always a crazy one, that if you had a system that bought at open and sold at close, you would be slightly green. And I'm talking about for the S&P 500. Like if you bought at open at 9:30 every single day and sold at 4 p.m., you would be profitable, but you would only just barely be profitable. You know what's far more profitable is buying at close and selling at open. That's actually amazing of how much more profitable it is to buy at 4 p.m. and sell at 9:30. That system, the second system, like it doesn't just a little outperform, it greatly outperforms buying at open and selling at close. Actually, you could literally trade on that right now. Even if you did some like martingale type of thing, it's actually crazy how much better buying at close, selling at open is rather compared to buying at open, selling at close. Market is closed like 80% of the time, so it makes sense that most movement is when the market is closed. Kind of like that might be part of the reason. Once again, we could try to discern when things do or are moving. Like technically, like I'm hesitant because you're talking about the pit session, but the futures market is Globex, so it trades 23 hours out of the day, excluding Saturdays. It's only closed from 5 to 6 p.m. So like that's why I'm a little bit hesitant, because it sounds like you're exclusively talking about the U.S. pit session. But even things like Robinhood right now have like 24-hour trading. Basically 24-hour trading. Also, wouldn't you get a day trade hit? Not if you bought at close and sold at open. No, that's 2 different calendar days. But I also suggest, for those of you battling with pattern day trading, I would highly, highly, highly recommend you don't trade stocks or options if your account's below 25K. Trading in itself is extraordinarily difficult, like very, very difficult. And trading in the environment of pattern day trading, when you have to consider that makes it even more difficult. So if you're in the US and your account is below $25,000, I would highly, highly recommend you don't trade stocks or options. Or if you do, don't use a margin account, use a cash account. But you have other things available to you. You could trade futures, you could trade crypto, you could trade SIM to funded account. It is very, very, very difficult to be a successful trader, like already very difficult. And trading in an environment where you have to consider pattern day trading, PDT, it makes it even more difficult. So if you did that, if you're like, no, man, I'm going to trade with less than 25K, I'm trading on a margin account, I would say that what you should do is then medium-term swing trading. If you are attempting to day trade with pattern day trading on a margin account in the US, so below 25K, attempting to be a day trader, and you're trading stocks and options, like I would pretty much bet that you're going to blow out. It's like it is, the odds are so incredibly stacked against you that you have to pay attention elsewhere and do something like I said, focus on swing trading, trade a different asset like futures where there's no pattern day trading, such as crypto, use a SIM to funded account, do a tasty trade-esque, like selling premium 45 days out. There's just day trading stocks or options below PDT. It's just, you're going to get destroyed. You're going to get destroyed. The percentage of people who are successful at that, it's probably 1 in 1,000, maybe even 1 in 10,000. So unless you're so egotistical and you have so much hubris to think that you're going to be the 1 in 10,000, just don't do it. Like, I'm attempting to save you money. Just don't do it. Like, there's other things now like that are available to you to make your life way easier. Way, way easier. All right, SPY is range bound, Qs are range bound, Meta tried to get going, Nvidia is range bound, Palantir was looking good, got hit, Avago range bound, Coin giving up, Meta, Microsoft giving up, Netflix range bound, Tesla bouncing off of 318 but still looking like shit, Nvidia, everything's seemingly range bound right now. Seemingly range bound. Yeah, we're just going sideways, folks. I wish something was happening, but once again, not only do I not have a working crystal ball that tells me the future, I also do not have a magic wand that forces the market to do something. I do have emojis, though, and they could be helpful sometimes. Meta is Palantir. Oh, Palantir just got a bid. 5 minutes bearish, 10 minutes bearish, 30 minutes holding bullish right here. We're on top of the EMA for the 4 hours, also bullish. NASDAQ, same thing, 5 minute, 10 minute bearish, 30 minute attempting to hold, 4 hour very much bullish. So we are bearish in terms of momentum in the shortest time frames, but more in these medium time frames, the 30 minute and the 4 hour. It's the exact same thing for the S&P 500 and for the NASDAQ. And from like just a pivot point type of an argument, we're literally just right on the high on both the SPY and the Qs, both really ever since minute 5, we've just been pinned to the high value. So you just got to wait. 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 Focus on swing trading. Yet in your first 5 years, you should only trade 10% of your capital, hold ETFs with 90%. You can learn to swing dollar cost average. That's why I've learned, and I can return 50 to 100% annual. I would agree with that. I would actually say the best way to approach day trading is to literally never do it. Truly. Truly, the most money I've ever made in my active trading career is swing trades. You're not going to make some crazy amount of money in day trading. You're just not. There are it is few and far in between of people who make a buttload of money day trading. If they do it, it's more akin to high frequency trading. Those are really the setups that make a lot of money day trading. There's a lot more money in swing trading, and the odds are more favorable. You're like, I can't say it doesn't exist, but what I can tell you is there's a lot more people making a lot more money off of swing trading than off of day trading. And I get it. There's a psychology in day trading of this idea that you're clocking in, clocking out, making money every single day. There's a psychological attraction to it because you feel like you clock in, you make money every day, and you leave, and it's in your account. I get it, but the math is just not really that supportive. I can't sit here and say it doesn't exist. There are a couple people I know who are day traders and they make decent money. But just in terms of odds of your percentage chance of being successful, and on top of that, the amount of money you can make, it's a lot greater in swing trading and actually kind of investing as well, rather than day trading. I can't sit here and say you're like guaranteed to blow out. That's not necessarily true. It's just simply not true. But if you want to stack the odds, like think about this. Option 1, day trading, your odds of being successful are lower, and the chance of you, like the amount of money you can make, is also lower. And then option 2 is swing trading, where your chance of being successful, as in how many people try it, actually make money, is higher, and there's a higher ceiling, as in you can make more money. Just your odds improve, and the amount of money you can make also improves in swing trading. It's just, it's just the brutal truth of the game. Like, I'm not necessarily saying it as it's a good or a bad thing. But it is something that should be well known by all of retail traders, because a lot of retail traders are getting sucked into this game of day trading, and it is it's not impossible. It's just extraordinarily difficult. Extraordinarily difficult. Remind you, this guy thinks he can beat a hippo. Yeah, what was that I was, like chewed up and spit out? I looked like I was chewed up and spit out by a hippo. That was one of the most demeaning insults I've ever heard in my years of doing this. I was accused of my physical appearance being akin to a person who was chewed up and spit out by a hippo. I still think about that. I just sit there and I think, damn, like it keeps me up at night. It does. It does. Folks, we've been range bound literally now for an hour. I don't know what to tell you. SPY's not going anywhere. Qs aren't going anywhere. The Mag 7's getting hit. Ooh, the SPY's losing a little bit of its way. The SPY's using a little bit of its way. How's my meta? Oh, I'm really crushing on meta. Up $21,000 on meta. Not bad. And guess what? It's been a swing play. I'm telling you, there's more money in swing plays than there is in day trading. I've been in this one since June 24th. Not bad to make about 21K. And that actually reminds me, remember, specialty shout out to Public. They are the partner of today's stream. There's a reason why I use them. This is, in my opinion, the best brokerage. I know of no other brokerage that pays you every single time you trade. So whenever I trade an option, whether it's a call or a put, whether I'm buying or selling, I'm earning a rebate for every single one. So if you get into Meta at 1384 and out at 1384, you're not break even. You're actually net ahead because of the rebates that you're going to earn. So check it out. It's pinned to the top of chat. It's in the description of the video. You're going to start out at a higher rebate tier. Now, if you're not an options trader, yes, they have equity trading. There's no payment for order flow. They have bond trading, some of the best UI, UX. They have crypto trading. They have retirement accounts. They have high yield treasury accounts. This is pretty much your one-stop shop. So check it out. Show them a bit of love. It is free to download. It is free to sign up. I think when you get on it, you're going to like it as much as I do. But yeah, trade options, earn rebates, no commission fees, no per contract fees. This is specific to option trading. Like I said, they have equity trading, crypto trading, bond trading, retirement accounts, high yield accounts. I think you're really, really going to enjoy it. So like I said, no harm, no foul to you. Check it out. Pinned to the top of chat, in the description of the video. And I think as soon as you start to see those rebates really adding up, you're going to realize why I like it as much as I possibly do, because it has just been, like I see it, it's just thousands and thousands of dollars in rebates. Thousands of dollars in rebates. All right, SPY potentially about to lose its way, but the Nasdaq is holding up a bit better. We have the SPY that's about to make a fresh low. We don't really need this anymore. We kind of had a fake out breakout on this trend line that we might just be coming down to this support level at 6180. If we start to see like a classic just valley inversion right off of this, yeah, that just means people are reacting to this key open interest level. So I'm watching 6180. The way we had this little setup right here, see how we puked and then it like quickly bounces out of it. I like those plays, especially off of key levels. So this setup that we had, I don't know, between 1021 and 1023, or a similar example would be 949. So see how this 3-bar setup, this 3 to 4 bar setup, we've had it twice today. If that happens right off of 180, obviously I didn't play these because it didn't happen off of a key level, at least that I knew of at that moment, but I have identified 6180 as a key open interest level. And what's the beauty of these types of plays is, yeah, it's a little bit of trying to catch a falling knife, but it depends on your overall time frame. I would argue the 30-minute, the 4-hour overall bullish. So you're taking a bullish like in phase with the overall time. But what's really nice is if you're wrong, you're only like, it's a paper cut right here. If you took this long position and you obviously had the opportunity to ride it all the way up, even if it dipped right here, it's just a baby little paper cut. Like it's all about, can you minimize risk? And then when you get into a good play, ride it as long as you possibly can, because before you know it, one good winning trade could pay off 10 of your losing trades. Remember, the game of trading always comes back to your positive, what you want is positive expected value, but it comes back to your expected value equation. That's what trading is. That's what gambling is. It's how often are you right, multiplied by your average win size. And then you take away how often are you wrong, multiplied by your average loss size. So for example, in all of these trades, if you're only risking like $100, $100, like just not much, but then all of a sudden, and let's say that you are wrong 75% of the time. So 3 out of 4 times you're losing $100. But what if that 1/4 of the time, 25% of the time, what if you're making 1,000? Well, all of a sudden you now have positive EV, positive expected value. This game time and time again. And those are the numbers you can mess with. How often are you right versus wrong, and your average win size versus your average loss size. I'm not here to pitch you that one is better or worse. There are hedge funds out there that are rarely right, but when they are right, it's like 100 or 1,000x return, but they're not commonly right. And then there's on the other side of it, something like whatever, high frequency traders, that type of stuff, where you're right a lot, but you're only right a little amount. And then when you're wrong, unfortunately, you take more of a sizable hit. I mean, one is not better than the other. Maybe for you and your account size and your personality, maybe one is better or not, but like at the end of the day, just positive expected value is positive expected value. So like I wouldn't sit here and say, oh, no, you have to trade in a way. I had an interesting conversation over the weekend when I was playing a bit of poker with people in Wall Street. They brought up a good point that if you are trading a system that is an extreme, as in right a lot, and you only have little wins, and when you're wrong, which is not often, you take a big hit, or the other side where you're rarely right, but when you are right, it's a huge win. When you're on the extremes, it is harder to model, which I thought was like kind of an interesting point. And I thought it was a very valid point, where if you have a system that's about 50-50, right half the time, wrong half the time, and obviously you just want to make sure your winners are bigger than your losers because you're basically flipping quarters, but you want your payout for when you're right, when you're picking heads to be bigger than when you're wrong, and it comes up tails. Those from a math standpoint are easier to model out. You can get a better idea of if the system is decaying and starting to break down, or if it's working as expected. So I think that's a fair thing to consider, but still it doesn't necessarily mean it's better than a different system. It's just exactly that. It's just a different system. So buy it open and sell at close. Could you leverage that with call options, or would theta crush you too fast? I mean, I don't think you should trade that system regardless. So buy at open and sell at close. Like, Mark, were you listening? I literally was telling you that barely has a positive return in itself for the underlying equity, no less playing it with options. I feel like I explained that entire concept and you were just not doing, like, I think your takeaway from my explanation on that was just the opposite of what I was actually trying to say. All right, potentially double bottom here on the Qs, and then the trade that I was talking about on the SPY right here. Wow, it's almost as if major open interest levels matter. It's almost as if this level that I called out to you and I said, hey, look for a cheap little reversal where you could get in at 82. You're risking 80. Literally my joke example of like, oh, you could risk $100 and then potentially ride it all the way back up. That is perfectly playing out in real time. Folks, name one other live streaming finance person who has such precise, accurate, mystic market call outs as that. Name one other. Like, I literally had 6180 on the chart before the market opened. I explained it using this example, and this is, once again, it comes back to the game of reaction. I'm not going to predict that we hit this. I'm not going to predict I'm not going to predict any level. I just sit there like a dunce and wait for something to happen. And I said, oh, wow, okay, it hit a key level. I wonder if we bounce off of it. That's it. Like, I wouldn't ever be predicting the next bar. I'm not predicting the next bar being green or red. If you went long here at 1041, yeah, you would be hopeful that it keeps going up. Of course, I'm not oblivious to that fact. But what I'm saying is at any point today, you really wouldn't have done anything till right here where we hit a key level and you can react accordingly because you have well-defined risk. And then at that point, the die are in the air and you're just kind of hoping it goes in your way. If you're right, great, ride it. If you're wrong, you have small, well-defined risk, and it allows you the opportunity to survive in like another day in the game. Like, that's what this is. METU is a leveraged meta ETF. Well, all the major like tech plays have their own. You can find 2x, 3x leverage. You can find inverse. Like, there's a ton of those out there. Matt K. Foy said the same shit. Who the fuck is K. Foy? Never heard of that person ever. I have no idea if they know what they're talking about. I don't know anything about them. This is like legitimately the first time I've ever heard that name ever. Maybe they're good. Maybe they're bad. I can't comment on it because I simply don't know. I do want to remind you, especially before people start leaving for the afternoon to get your lunch, please remember that JP Morgan is going to be rolling their position at some point today. Hell, for all I know, maybe they already started it. I don't know. But at some point today, JP Morgan is going to do the roll. It won't be completed until the end of the day, right after market close, but they're going to start the process at some point today. So don't be surprised if we see a pop and a drop and a pop, or just like kind of crazy overall S&P 500 action. So just, I want to remind you of that. It's going down today. Today's the day it's going to happen. So please just be on the lookout for that. Matt, you don't know who K-Foy is? I sure haven't. I don't know if anyone in chat's ever heard of this person. Like I said, they might be an amazing trader. They also might be a horrible trader. I think lack of hearing of someone doesn't necessarily like have any commentary on their quality as a trader. I don't even, is it a guy? Is it a girl? Is it an organization? I don't know what it is. I don't know if I've ever seen those four levers put together in my life before this. I've now gone 3 decades without seeing KFOY all put together. Like, you guys you're breaking records for me. Whole new words are seeping into my brain right now. Whole new words, and it's all because of you guys. Why today? Because it's the end of a quarter. It's June 30th. The play is every quarter. So it goes January, February, March, the end of March, end of June, end of September, end of December. Kentucky Fried of Yemen, very well could be. Very well could be. What are we missing? Oh, yeah, right here. Rumble joins the Russell 2000, 3000. All right, here's a look at the flow. Here's a look at the flow as well. Definitely trending down. I want to see this. Nothing. The big guys aren't doing shit today. At least as of now. You could see on how a couple different days, all day Friday, buying. All day Thursday, buying. Wednesday, nothing. Tuesday, buying. Monday, buying. Today, very similar to 625, I believe, Wednesday of last week, where the big boys didn't do fuck all. Yeah. Big plays. The big players are sitting on their hands. They're probably just catching shrimp on RuneScape, if I had to guess. If I had to guess, they are just catching shrimp on RuneScape. Matt, what would you do if you were 23 again? What was I doing at 23? 23, that was 2017. 2017. Okay. One time in 2017, I just got into my new apartment and I was trying to cook a sweet potato in my microwave. And I don't know if I overstabbed it or if I understabbed it, but the end result was a huge plume of smoke came out of the microwave when I opened it, to the point that I thought it was going to be setting off the, I guess, the fire alarm. And where I was, if the fire alarm goes off in an apartment building, all of the firemen show up. So my anxiety spiked. It spiked by a lot, because it was like, fuck, I'm gonna have to deal with the cops. I'm gonna have to deal with the firemen. I'm like so embarrassed. I don't know how to make a sweet potato. So if I were 23 again, I'd probably not do that. That's probably what I would change in my life. That was like, I think my major downfall in 2017 was that fucking sweet potato. But other than that, I do everything the same. Just the sweet potato incident of 2017. It haunts me to this day. It really, really does. Haunts me to this day. I would just DoorDash the sweet potato. I don't know. Maybe I'd get addicted to steroids or something, so I was super jacked by now. Who knows? Start a drug habit. Abuse synthetic drugs. Maybe I'd become a priest at a seminary. Get closer with the Lord. SPY still kind of trending down. Mag 7 kind of flat now, actually. Like I said, I mean, we're seeing it in options market that there's not much of a flow. And then we're seeing it in another data measure right here with the tick that it's just, we're not seeing a big influence from large players. I think what the market is most likely waiting for is for JP Morgan to roll. Like, everyone is just kind of waiting for this roll. So maybe that's why no one's doing jack shit right now. Probably. Is everyone's trying to see, okay, like, what strikes are they going to pick? What's the influence going to be? So that's my guess. Is that accurate? I have no idea, but hey, sounds reasonable to me. Sounds reasonable to me. I want to see what news. Dow jumps 100 points. S&P adds to record as investors bet on trade deals ahead. Home Depot is buying GMS for about $4.3 billion as retail chases more home pros. Senate begins voting on amendments on Trump's domestic spending bill. Canada rescinds digital services tax after Trump cuts off U.S. trade talks. Dude, those motherfuckers are going to end up as our 51st state. Oracle stock jumps after $30 billion annual cloud deal revealed in filing. WNBA announces 3 new teams in Cleveland, Detroit, and Philadelphia. I feel like that only matters if Caitlin Clark is playing on all of them, because that's why people tune in. Mamdani says, I don't think we should have billionaires. The whole, like, we shouldn't have billionaires thing, I really don't understand that argument. I don't think there's a single billionaire who's like liquid a billion dollars. They're a billionaire because they have equity, most likely in a company that's just publicly traded. And this idea of like, well, they shouldn't be, but it's like, well, what do you mean? There's other implications than just not being a billionaire. It's not like it's just in their bank account and they're doing nothing with it and hoarding it. It's because on paper, they have equity in a company and the company is now a certain value. And because they have so much equity, they're a billionaire. But that doesn't mean they like just have this $1 billion. And then like, you can't just make them sell it because that changes the cap table and they might not no longer have like voting control of the company or like a thing like that. Like, what the fuck? This idea of like no one should be a billionaire. It's like, I mean, it's a bit weird to be a billionaire in cash and just sit there, but it's a free fucking country too. You kind of just, if that's what you want to do, that's what you want to do. It's your money, dude. Like it's legit just like your money. So, I mean, I think I'm of the moral opinion that there's better things to do than just have $1 billion in cash in your bank account. But once again, it's their money. It's not my money. But I would also argue, I don't even know if there's an example of a billionaire with like just pure cash like that. Generally, it's equity in companies. So this idea of like, nah, that shouldn't just like, it's funny because when you have the argument against billionaires, it's always pitched as if these people just have a bunch of money in their bank account, but that's not how it works. I identify as a billionaire, dude. Fucking me too. Yeah, dumbest shit was in Batman 3. Bruce Wayne was suddenly broke, makes 0 sense, and the electric company shut his power for non-payment. Oh. Mamdani is an actor. He means none of it. The show must go on. Ad revenue. Okay, I heard this, and I heard it on the internet, and as we all know, everything you hear on the internet is obviously 100% true. Is it true that his mom is like a multi-millionaire Bollywood director, and his dad is like a tenured professor at Columbia or something? He pitches it as if he's like this like refugee, like bootstrapped-esque character who had like nothing growing up, but I heard on the internet, and I get it, it's the internet, who knows if it's true or not. I heard his mom is a multi-millionaire Bollywood director and his dad is like some high up professor. Like, I don't know if this dude actually had like a tough life. Like, he pitches it as like fucking just bootstrap, brother. Like, pick yourself up by your bootstraps and work. But I don't know. There is some counter information out there, if you will, of his actual upbringing. It seems like the fact that you guys aren't agreeing or disagreeing with me, maybe this was just made up information. Maybe I'm spreading lies on the internet. I thought some of you guys would have heard it by now. If he can't explain the nuances of pooping on the beaches of India, he's bullshitting. Weird having people sticking up for billionaires like they're looking out for you. I don't think it's sticking up for billionaires. I think it's just explaining like a factual thing. Like, okay, by that logic, let's say, okay, the world's most powerful man, Trump. If the general public is getting something wrong, let's say about Trump's power to, I don't know, declare war, get us into war or something like that. If you're just clarifying something that is like logically factual, like empirically factual, if you're just reporting on reality. That doesn't mean you're sticking up for them. I don't think anyone, like you said, billionaires don't need people to stick up for them. They're billionaires. People don't need to stick up for Trump. He's the world's most powerful man. But it's not sticking up for someone just to explain reality. So like that contortion of like, oh, you don't need to stick up for billionaires is like, no, you're just explaining something logical. Like, hey, billionaires don't have that money in cash. That's actually equity in companies. Like, that's not sticking up for them. That's like us all agreeing on like what's happening in reality. That it's so weird. It's so weird sticking up for billionaires. Like, who's sticking up for them? Like, it's literally just explaining a fact. Like, it's just, sorry, that's reality. And apparently reality hurts a lot of people's like fucking feelings. Maybe a cap on individuals' wealth at 1% of GDP, 300 billion. Well, if we did that, no one in the United States is even at that level, so it doesn't really matter. And also, wait, why are you trying to cap other people's wealth? Like, dude, it's their money. I don't like this obsession with other people and what they're doing. Like, if it's this, what's it? And I'm not saying you guys are saying this, but there's like this common thing that like people believe just because you're a billionaire, you're like inherently evil. Dude, a lot of people in the modern tech age are billionaires because of now things that we use every single day. Imagine life without Amazon. Imagine life without Google. Imagine life without Meta. Imagine life without Nvidia. Imagine life without tech. Like, imagine where we would be if we didn't have these like dominant tech companies that have improved cloud computing, that have improved fucking so much of our messaging, our connection, like across the board. And so like people love to use their services, but then they don't want the person who created the services to get rewarded for it. Like, they're the one who took all the risk to get it going. Like, fucking, hey, any of us had that opportunity. You could have created Meta. I could have created Meta, Nvidia, Google, but some people just right place, right time, right brain power, right team, and they put it all together. They like got all this shit together and they made it work. And the people who pull off big things like that in life, you generally get really rewarded for it. And it's not just them. Imagine the people, okay, like for example, you can maybe you do, maybe you don't like Bezos, like whatever. But you know how much money Bezos has now made other people exclusively because of the stock of Amazon going up? I did not create Meta, which I know might surprise a lot of you guys, but I've made a lot of money because Meta as a stock is something I could invest in. There's public exposure, so I could ride it higher and higher and higher. So like this idea of like, oh, they're just doing it like solo and no one else is benefiting from it. No one else is like reaping the rewards of these like mega companies. No, actually a lot of people are. A lot of people are. Elon created trillions of economic activity. Yeah, exactly. You know how much money Tesla stock has made people? All these. They've made a lot of people a lot of money. Like, and then we're just talking about like on paper, you bring up a very valid point of just the economic value. All the job. Oh yeah, no. Like you guys are bringing up other secondary and tertiary points of, yes, okay, I get that either an individual or group of individuals are making outsized wealth, but what about the fact that other people are making a ton of wealth? Other people are now getting employed jobs. Other people are like literally just betterment of humanity. Of like, I mean, it's kind of good that some of these biotech companies are publicly traded because that means that they have the capital to research medicine, and then the medicine, they have breakthroughs, and guess what? We start saving lives. And then what? People are like, no, I don't think that person who came up with the life-saving drug should get like compensated for it. Like, what the fuck? Why would they put in that effort to do it? Like, I don't think that many of them would. No problem with billionaires, but Amazon, Google should pay their taxes. Well, that's another thing, is that people think that they pay no taxes at all. And that's also just statistics. Like, that's just not reality. They do sidestep certain taxes, but they're still paying taxes. Like And that gets really into the nitty gritty of it. If they're writing off certain things for R&D and then they're doing this and that. But if you're sitting here right now and you truly believe that Amazon does not pay a dime in taxes, if you believe that Google does not pay a dime in taxes, just fucking go do 4 seconds of research. What's crazy is that all of their quarterly earnings, you can see their taxes and their tax liabilities and what's going on. It's there. This is not hidden information. It's going to be reported to investors. It's going to be reported to the SEC. There's going to be a gazillion different things you could find online of what their tax burden is. And they pay a lot of taxes. They pay a lot of taxes. This idea, like, I don't know. Well, I know where it came from. It's because especially players like Amazon, they do sidestep certain taxes, which I think is maybe a little bit morally questionable. I'm not saying that that's appropriate, but because they've sidestepped certain, like a specific tax, then everyone's like, oh, they don't pay taxes at all. And it's like, well, that doesn't make quite the sense. I believe there should be no limits on income in a capitalist economy, but I do think that the ratio of income with their employees needs to be set so that everyone, like, I assume who you're going to say, like, who's involved is getting more and more and more. Yeah, I mean, I would care. I get that a lot of people are super, super focused on the difference between what the top person and what the bottom person at a company makes, that ratio. But also, you have to understand that generally, especially for tech companies, which I'm a little bit more knowledgeable of than something like Boeing, their decisions for the company are that much more impactful. You have to understand that if you took a coder, a mid-level coder at Meta, and they're either doing their work, they're not doing their work, whatever. Maybe they're developing some sort of feature for Instagram. If they get it out, they get it out. If they don't, whatever. That is far less impactful than Zuckerberg's decision to get into AI and hire certain for AI. Like, folks, like, I don't think it's mean. This is just accurate to say that at a company, certain people's decisions are that much more impactful for the success and or failure of that company. That's what it is. Like, the CEO of McDonald's, when they decide to, I don't know, fucking fix their ice cream machines, that's going to have a much bigger impact than a cashier at McDonald's just hitting buttons and taking your $20 bill to, like, sell you like 6 chicken McNuggets. Like, I don't know. I don't know why I think it's something that could be looked at, but I think in terms of the priority table, what I think as a functioning society, I think we should care about our weakest and our poorest and the people most in need. So whenever it comes to the stats of an economy, you have this idea that some people are like hell-bent on focusing on the difference of your highest income and your lowest income people. And that's never, ever made sense to me. Why do I care about the differential as the top priority thing? I'm not saying that shouldn't matter, but I'm saying in the priority table, it's way below. Because you could have no wealth gap and everyone would be dirt fucking poor. That's not a better solution. It's not. I think in terms, like I said, I'm not saying we shouldn't look at the gap. I'm saying what we should care far more about than the gap is the bottom people in our society, especially economically, and are they trending up and at the velocity of which they're trending up. So my question to the people in here who are like focused on the wealth gap, let's just say for the sake of this like conversation, just to keep the math simple, let's say the wealth gap is 10x. Would you rather that the wealth gap be nothing and then our poor, like let's say the wealth gap, like let's say we drop it to 2x and our poorest people are just flatline, there's no growth there? Or would you prefer that allow the wealth gap to go up to 100x, but our poorest people, what if that goes up relative to where they were 5x? Like, I think there's a lot of people who are just hell-bent on closing the gap as if that like will solve all of our issues, when in reality, I'm of the opinion at least that what matters the most is our weakest, our poorest, the people who are needing of help the most. I care about that group and their particular growth And I like, if anything, I would want that the velocity of the improvement of their situation to get better, to get better, to get better. But I think there's too many people who are like, nope, I would rather just there be no gap, and they don't care about the trade-off like otherwise. There's no second order thinking to it. Matt was done trading at 9:45. Well, there hasn't been anything. What the fuck would I trade? I think it's actually a good thing that I did my one trade and ended, because what would I be doing right now? Like, what are you seeing that's even worthwhile to trade? Matt, you're missing the point here. The guy who slept in his car for 3 years to build a multi-million-dollar tech company needs to be close in pay to the illegal immigrant that empties the trash bins. Jesus. %70 of population. What's 70%? Middle class is 70% of the population. Okay. The problem is not the money. The problem is how the money is used to influence politics, whether it's directly buying politicians or buying media or paying to destroy the opposition. Yeah, but that happens on both sides. I don't like it on either side, but it happens on both sides. The right side has Elon Musk. The left side has George Soros. If you think that's only unidirectional, you're just blind. You might get pissed off that sometimes it's used against the party that you support, but it does both ways. And also, you're in really dangerous territory because we have free speech in this country. Free speech is free speech. Like, if you pay to have your voice amplified, you can say what you want. So, like, how would you possibly ever legislate against that? Because when you legislate against it, you're really, really encroaching on the world of free speech. Like, you're getting like super, super close to saying people can't say what they want to say, which I think is actually a super fucked up thing. Congress could ban lobbying by... Yeah, well, lobbying is a specific political setup, and I think there could be extreme lobbying reform, and we would all be better for it. I think there could be extreme reform in the world of lobbying. So the more money you have, the more you can have your voice heard. Yeah, that's how this game works. The more physically gifted you are, the better chance of you being a professional athlete. Fucking welcome to the real world. One of the most devious things the U.S. education system does is tell us that we're all equal and we could all do everything we set our mind to, and like there's no difference between us all. That's the biggest bullshit ever. It is like the worst bullshit ever. We are all born with natural abilities that then can be cultivated through many hours of dedicated, arduous work. And then we're all going to be born with shortfalls. Folks, I'm not like some 6'4" insane athlete who's getting calls from the NFL and the NBA. Dude, being a professional athlete was never in the cards for me. And I'm not fucking crying about it. I'm not saying that we should normalize all sports and allow like whatever, wherever I am in the distribution table, that we have to have X% of me in sports. No, the sports are for the best people in the particular arena of that sport. It's just, I think every world should be that, every particular domain should be that type of merit-based thing. The best people are going to exceed. And fuck, if I'm the best alligator catcher, well, society cares more about the NBA than alligator catching. So even if I'm the best alligator catcher in the world, will I make decent money? I would assume so. In all reality, I don't know much about alligator catching, but I assume I'd make good, like, whatever, a survivable wage. But society, for whatever reason, and I didn't make the rules, cares way, way more about being the best NBA player than they do the best alligator catcher. So, like, whatever, dude. You're born, and through nature and a combination of nature and nurture, you're going to have a certain skill set. Find out what you enjoy, what you're naturally good at, what society values. Find the Venn diagram overlap of those three, and just rip it and focus on nothing else. Just do it, do it, do it. You're about 30x more likely to be a sociopath if you're a billionaire. well, that's just poor math. It could go the other way. Like maybe you have to have sociopathic tendencies to have even the capability to become a billionaire. Just because you're a billionaire doesn't mean what you're saying is mathematically invalid. It's kind of like what comes first. Like maybe out of the universe of billionaires, there might be a higher showing, but that might tell you something about what is required of you as a person to become a billionaire. But also, like, what? Just because someone's sociopathic, you think that just means that they're like a bad person? That's a weird assumption that all sociopaths are inherently bad people. It's the same thing. Like, that doesn't mean all billionaires are bad people. I bet there's good billionaires. I bet there's bad billionaires. I bet there's good sociopaths. I bet there's bad sociopaths. I bet, like, it's the same thing. Like, what you could say about poor people is the same as billionaires. I bet there's piece of shit, horrible poor people. I bet there's phenomenal, amazing poor people. Like, having money or not having money isn't, like, descriptive of someone's morality. That's like, I would argue that there's no correlation between the two whatsoever. The creator of Idiocracy was a prophet. Yes. Well, folks, we've managed to do a bunch of fuck all today. We're just getting pinned to the high value of Friday, but we did at market open make a new all-time high in both the S&P 500 and in the NASDAQ. But other than that, the market is apparently tentatively waiting for the JP Morgan roll to start. We're just waiting. I'm poor and I'm a terrible person. Jesus. So for sure, that's a good example. Oh, man. That's a good one. All right, folks. Well, before I let you go, show a little bit of love to Public. I would truly appreciate it if you guys could check them out, sign up. It's free to download, free to sign up, no commission fees, no per contract fees. Get a little looky-see. I think you're going to enjoy it as much as I do. We will be posting an update video after market close today. And then we will be streaming once again tomorrow morning. Please don't forget that Jerome Powell, the chairman of the Fed, will be doing a live press conference speech type of thing right at market open tomorrow. So be on the lookout for an update video today, whether you're watching on Rumble or YouTube. It'll be coming out wherever you're watching. So that's going to come out around 7 p.m. ET. Then we're going to be streaming once again tomorrow morning, 9 a.m. ET. So update video tonight and then another show tomorrow morning. In the meantime, don't do anything too crazy because we're just waiting for the JP Morgan roll. In terms of individual equities, I would still argue Meta looks great. NVIDIA looks great. The semiconductor industry looks great. I'm looking for Palantir to recover, and I'm looking for Tesla to recover. Those are all the kind of things on my watch list. Obviously, that is not an exhaustive list of the only things that matter. I'm just giving you kind of an idea of like what's on my particular radar. I appreciate all the good vibes. I appreciate the great discussion. I hope you guys had a phenomenal weekend. I hope you crush it for the rest of today. I'll catch you later on this evening, and then once again tomorrow. Appreciate all the love. Peace.